This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with their closing grain and livestock comments for February 24th, 2017. Corn market today down 1.5 cents. Soybeans up 1 3/4. Wheat market Chicago down 5 to 6 3/4. The Minneapolis market was kind of steady, unchanged here today. Corn market on the week down 4 1/4. Soybeans down 19. Chicago wheat down 9 3/4. Minneapolis down 1.5. When you look to the grain trade this week, a lot of the talk around the market, Outlook Forum #1, acres forecasted at 88 million acres for soybeans and 90 million acres for corn. Carry out for 17-18 forecasted very similar to what we're currently enduring, with corn around 2.2 billion bushel and the soybeans around 420 million bushel. So not a lot of change. I think that's why the market chopped around a little bit. I think the big story around the marketplace is this fund length that's in the markets. Managed money is holding a pretty long position in beans, crude oil, cattle, hogs, and to some degree they've built a longer position in corn. And we do see that coming back off to some degree this week with some liquidation. But I just think the market in a nutshell is coming to grips with the idea that we may be a little vulnerable here, and that if that investment money slows their buying at all, which with some technical chart action that's negative has occurred this week, that we could see some liquidation, and that's very well what happened. Now, how much we get, flip a coin. That's kind of the atmosphere we're in. If they do decide to get out, Katie bar the door, because we struggle to find who the buyer will be. But I think we're a little early in the season yet to see a massive liquidation. So we'll see what shakes loose. Kind of be attentive here. Next week, a very important trade with some of these key technical counts being kind of achieved here to some degree, and the charts breaking down to some degree. The feeder cattle market down $3.50 to near $4 on Friday. Live cattle down anywhere from $157 to $217.5, and the hog market was up about $110 to $140. So quite the reversal from events that we've seen here as of late. Cutoffs really weren't too bad in the cattle, actually up $2 at midday. We were $4 to $5 higher on a live basis with cash trade this week, but really kind of peaked out as a net result of that with the Wednesday trade. On the week, the feeder cattle market was down $237.5, live cattle up $582.5, but that was based off the February. April was down on the week, and the hog market down $275. Looking at hogs as we work ahead, the cash index still up $10 over the futures board, so that's going to be very interesting to see how that unfolds with the April futures lagging behind. Also important to note here, with the litter size we've got in hogs, we need to be a little bit attentive. If weights start to pick up into the summer, that could be a negative catalyst. So kind of a near term that's a little more friendly right now with the cash index. Summer months that can continue to be pressured to some degree as a result of that concern. As we work ahead, we'll watch disease problems and the bird flu overseas very closely for development. So as we come to next week, I'd look for corn, beans, and wheat to possibly begin to start fading some more as a net result of the weak technical action. The cattle market going to be very dependent on the cattle on feed numbers and the placement numbers. In the hog market, a little momentum built back this week, but a lot of chop in these markets as we search for direction. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation.